Hello guys, this is Pankaj Sethi. Welcome to our investments channel, Investing with Sethi.
Hello friends, welcome to our investments channel, Investing with PS. Please note that in this channel, we share investment opportunities that I am exploring, and this is by no means an investment advice. Please do your diligence and research before making buy or sell on the stocks that we mention. Please seek professional financial advisors' advice before doing any transaction. We are not certified advisors for any financial matters. This stock's second quarter result came out good, since industry is coming out of the COVID situation and demand is increasing in this sector. Outlook for this stock is positive for this small cap stock, which has niche product with strong moat and monopoly in the business. Since the pent-up demand is starting to show up, there is also export momentum, and then there is very good rural sector recovery. This stock is available at below fair value. It is very good, especially in a very highly priced market right now. This video is for education purpose only and an example of the analysis that I do on a stock when I decide to put the stock on watch list and when I decide to buy a stock. Please watch the video till end so you know what would be good point to buy this stock. And the stock name is Rajratan Global Wire. Rajratan Global Wire, RGWL, is one of the leading manufacturers of high-carbon steel wire in India, specializing in automotive tire bead wire, high-quality spring and rope wires. Stock is on medium to high price-to-equity ratio at 25, but the expect earnings set to rise, and it's a cumulative growth story. Stock returns have been overall very good. Dividend-related there is no data since it's still new. Stock is not an overbought zone now, so there won't be immediate selling pressure on the stock in short term. Their ASM flag, that's a red. So it's good idea to put stock in watch list and see how it behaves once ASM flag is removed. Company has good history and its growth story is good. Performance quality of the stock overall is good. Revenue and income growth has been overall historically good. This is a high-growth stock with strong moat for its business with monopoly on niche product. Let's look at how the stock has performed. Last week stock has gained more than 2% and last month stock price has gained by about 2%. Last 3 months stock has grown by about 9%. 1 year gain is more than 400%. Since the stock IPO happened less than 2 years ago, the stock has become almost 10 times since its listing. So overall the stock has been performing very well. But do note that we are in historic bull run now, so this momentum in stock could be effect of the bull run. Let's look at the 5-year growth of the business. As you can see, revenue growth for last 5 years average is more than 15%. It has grown to more than 500 crore from 283 crore. Income growth has been on the very positive, which has grown to 50 plus crore from 18 crore. Market share overall has been increasing. During the 5 years has increased from 22% to almost 30%. Company's debt-to-equity ratio is low of 2.15% compared to industry average of 105%. Mind well, some sites compare the peers from steel industry for this stock. Also, current ratio of the company is more than 90% compared to industry average of 80%. Overall, this a niche business with high profit margin and very high growth. With COVID out of the way, there is possibility that the stock will continue to perform good in the bull run. Comparable industry peers for this stock are Varroc Engineering, GNA Axles and Precol. Check the holdings in the stock. Promoters' holdings have remained stable over the time. It is at almost 65% and is stable. It's green. Mutual fund holdings are reducing and are at around 9.2% now, so that's a RED. FII had shown interest in this stock. We're holding 0.02% and there is reduction. So on stock holdings pattern, there is nothing green. Typically in small cap stocks, this is common. Following are the market expectations with respect to growth. It's very positive coming out of the COVID situation. There are not many analysts covering this stock, but looking at the most recent financial result, the growth story of this stock is intact. Revenue had grown at 14% and is bigger than last 3 years' CAGR growth. Also, earnings growth has been almost 60% from the last 3 years' CAGR growth. Overall, it's a good small cap opportunity for long-term investment. So to summarize, this stock's second quarter result came out good. Since industry is coming out of the COVID situation and demand is increasing in this sector. NER profit up almost 140% in the recent quarter. Auto segment is improving. This business has a strong moat and is a niche business. Outlook for this stock is positive since the pent-up demand is starting to show up. There is also export momentum, and then there is very good rural sector recovery. This stock is expensive, but that's the story of small cap stocks. If you believe this business will continue to grow for long term, then it could be a good buy in the recent stock pullback. There are risks of commodity cost pressure and overall auto sector is facing the chip shortage. Overall, we are looking for a small pullback in this stock from its all-time high of 2,300s in the range of 2,250 to 2,300 would be a good buy for the long term. Stock can come down to its smaller support level of 2,000. You can also wait for that price range to come. At the current price, also the price is not bad for the long-term horizon. Please don't forget to like the video and share with your friends and family. Subscribe the channel. Do comment and let us know which stock would you like us to cover. Do also share if you already hold this stock and what price did you purchase it at.